So many of you know what a dividend is and why companies pay them. If not, then basically it's just a chunk of money that a company pays you, usually every quarter, just for owning shares of their stock. Now some companies pay huge dividends, but that's not always a good thing. Other companies pay no dividends at all, and that's not necessarily a bad thing. There are, however, some companies that I know you've heard of that pay good dividends and have a good history of paying those dividends as well. So today we're going to talk about 4 dividend stocks that are well-known companies I know you've heard about. First up is Verizon. You've heard of them, right? Now they pay a 5% dividend, so whatever return you get from holding the stock, you can add 5% to it, right? Just for purely owning the stock. They'll pay you that in a dividend. Now for 2016, Verizon was up over 20% just for 2016. So imagine making a 20% return on the stock in addition to the 5% return from the dividend. Now the last time Verizon had a down year was 2014 and they lost 0.5%. But they paid out 4.5% in dividends, so you can see how it kind of still worked out in your favor. Okay, next, let's stay with the telecom stocks. Let's look at AT&T. That's the second name that pays a dividend that I know you've heard of. Now, AT&T is currently paying about 4.75% dividend, which is right in the middle of the range. If you go back over 15 years, that's about average for them. But here's the cool thing, right? We're long-term investors, so let's talk about this. For the last 15 years, AT&T has averaged a 4% return on its stock, which just means the stock ended about 4% higher on average for the last 15 years. But they paid on average a 4% dividend. That's an 8% return just on one stock if you owned AT&T and just held it and did nothing. Now remember, that performance is through the dot-com bust, or at least the tail end of it. Also the financial crisis, or the real estate crisis, if you know it that way. The stock still averaged 4% return through all those crazy ups and downs. Okay, the third brand that I know you know about is Coca-Cola, right? We all know them. Now I got you all excited about the first 2 names, but Coca-Cola actually pays about a 3.5% dividend. Now investing in Coca-Cola is like the tortoise in the old fable, The Tortoise and the Hare. It's the slowpoke. The active traders, the day traders, they don't go anywhere near Coca-Cola. It's the slow and steady of all the stocks out there. Now the good news is that over the last 15 years, Coca-Cola has actually averaged a 6% return for shareholders, just slowly. So with the share performance and the dividend, you get a slow, steady, almost predictable 10.5% return on your investment. That's not bad. You're starting to see how dividends really do add to your bottom line. And the fourth stock that I know you've heard of that pays a dividend is McDonald's. So they actually pay about 3% on average for a dividend. And the deal is McDonald's would be the most volatile of all of these names, meaning the price of McDonald's moves around a lot more than the price of, say, Coca-Cola. Over the last 15 years, McDonald's has averaged a 12.5% return for its shareholders through the ups and through the downs. The deal is you're going to see a lot more ups and downs with McDonald's because it goes on sale quite often. It just gives you more opportunity if you like to be somewhat active. So there you have it, 4 names that I know you've all heard of that really have a pretty good track record. Now, I'm not recommending in any way that you go out and buy these stocks. I'm just getting it in your brain that it's okay to buy dividend stocks, the big names that we all know of. It's not as flashy as being in and out of the hot biotech stocks or the pot stocks at the moment, but it sure pays. Now, if you need a guy to help you with those investments, that's what we do here at Jazz. I'm always available. Feel free to leave a comment, send me an email, or you can always contact me directly at